Hi everyone, Darrell here from the Wealthspire Investment Team with our latest installment to Markets in 2 Minutes. We continue to have a lot of conversations with clients about the equity market these days, and the tone of a lot of those conversations is one of caution. It feels like, other than a few relatively brief bouts of volatility, stocks have just continued a steady climb higher and higher that accelerated over the past month or so, and it's causing a lot of investors to question whether they should proceed with caution going forward. And while valuations are elevated and there are certainly reasons to be thoughtful about how we invest in equities, I'm going to highlight a few quick data points that we think offer some support and justification for how markets have performed recently. First, we've seen an acceleration in business activity over the past year and a half or so, which came after a sharp increase coming out of the pandemic. From our perspective, this is reflective of two things. One, entrepreneurs and business people remain optimistic about the prospects of the economy going forward. That's a reflection of strong sentiment that is helping to support the economy and markets. Secondly, the rapid advancements in technology, namely AI, are helping to make it easier to incubate a business, which is something that we view as a tailwind for the macroeconomy going forward as well. The second piece of data we wanted to highlight here is a bit easier to follow in terms of its direct impact on market performance. Q1 earnings season is just about wrapped up at this point, and as measured by year-over-year earnings growth, it was the strongest quarter for the S&P 500 since 2021. Earnings growth came in at almost 30% year over year, well ahead of consensus estimates and double that of the previous run rate. This is something we've highlighted in the past, but it's incredibly important because it provides fundamental support for prices to push higher without valuations becoming increasingly stretched. And so it's important to remember that while prices may feel elevated, and it is fair to question how long the momentum might be sustained, there is justification for higher prices today in the fact that companies are producing incredibly strong profits and earnings growth, beyond anything we've seen in recent history. As a result, long-term investors would be well served to maintain a healthy allocation to equities, even despite elevated valuations. Thanks for tuning in.